So we're ready for the next session. And for this session, we'll be speaking with, or I'll be speaking with, in a fireside chat. I could probably find a background that showed a fire crackling, but I haven't just done that yet. So Vaughn, if you could turn your camera on, and we'll do the intro and get started. Hello, hello, hello. You need the microphone too.
Hi
You know how
there.
these things work. Hey, man. I'll do a quick little intro and we'll go from there. Wow, great poster in the back. So, Vaughn, he's a Chief Compliance Officer of North America, overseeing and managing compliance for Rabobank's North American business in the US, Canada, and Mexico. Oh, you got Mexico too. In this role, he's responsible for advising a broad range of legal, regulatory, risk, and compliance matters and leading management of regulatory compliance programs supporting Rabo AgriFinance, De Lagerladen, and North American Wholesaler. I hope I didn't butcher that. He's a member of the executive team of North America and serves on the boards of Rabobank Capital Service, Rabo Service Securities, and member of the global compliance management team. Rabobank, and this is the good question, is the global financial services firm headquartered in the Netherlands. So we're chatting, and one thing that was interesting is the theme of this was AI, and we heard about AI a fair amount from the previous presentation from Linus. But when we spoke earlier in getting ready for this, you talked about how the idea is COVID influence, and the influence of COVID was a little different than I would have expected during our earlier conversation, and how it affects your artificial intelligence efforts. So I think that might be a way to kick it off.
Thank you. And thanks for having me. Good morning to everyone from North America. I think Linus did a great job, and a lot of my comments were going to be very similar, but I think I'll pivot some of my remarks to the risk perspective as the CCO and kick it off, as David alluded to, with the impact of COVID-19 from a compliance perspective with respect to KYC, AML, fraud, and the innovative approach we were taking as an organization, and how COVID-19 really disrupted that earlier this year. We were locally in North America working closely with our regulators and supervisors, both in our home country in the Netherlands, but also in the United States and other countries. And what we saw in March was a regulatory and supervisory pivot away from engagement with us on the innovative path that Linus described earlier in terms of our target operating model for financial economic crime. And they shifted almost entirely in the month of March and then into April into safety and soundness and into liquidity and capital for the banking system. And so what we saw was a pivot in our organization to a dialogue that was much different due to COVID-19. It is 8 months into it, and we still haven't, albeit we're stable. I think the financial system is stable. We haven't gone back to that frequency of dialogue with our key stakeholders, the supervisors and regulators, on the innovation theme and on how, to good effect and in a prudent manner, we can deploy further techniques, as Linus described earlier, whether it be more robotic process automation, whether it be evolutionary programming to some of the models we run, machine learning, natural language processing, all these defined AI techniques, which are working to various extents in our organization. They've been put on pause, more or less. So we're running a model that looks very much the same as the model we ran earlier this year. It's in effect on pause. Now, the great comment was made earlier in the first session on innovation and the speed at which innovation takes place. And what I always find in my experience over the years very curious is the lack of intersection in the timeline between innovation and the regulatory bodies around the world. And it always is a catch-up from the regulatory perspective. But as innovation goes into light speed and warp speed, I see that delta increasing ever more. So that's why, as an organization, we've taken it upon ourselves to engage that stakeholder community called regulators and supervisors quite extensively, to be as transparent as we can, to collaborate on innovative ideas and techniques, so that when we do ultimately, in a point in time, turn an innovative switch on, it doesn't come as a surprise if there are bumps in the road, which inevitably there are. We've had cases where in certain models in AI, there has been bias that we didn't highlight, and then we had to recalibrate models, for example. On the COVID-19, another comment from a CCO risk perspective. As we were watching the news earlier this year in Asia and anticipating a pandemic in March, we looked at our target operating model for financial economic crime. And we looked at the management information around the target operating model to draw a distinction between what was historic activity and what we anticipated would be activity during the pandemic and where the differences would be. So for example, we anticipated, or at least I anticipated, an increase in SAR filings, an increase in S3s. I thought in certain respects in our transaction monitoring models, we would have more alerts. Thereby, we'd have to work more cases and ultimately some more SARs. So I thought my ratios would increase in the model. I anticipated—
just one quick one. It's S3. I know SARS. S3, I'm not sure if I know that term.
Yeah, it's an internal suspicious. It's basically when an employee thinks there's suspicious activity. It's an acronym, and it's S3 in our nomenclature. I know it's suspicious, and then there's two other S's, and we just term it in S3. And it's really a flag to our FEC group to do more review and
more digging to give this one an enhanced due diligence. Yes.
Yeah.
Okay, thank you very much. It was just SARS. I figured everyone knows, or these are all, this is very U.S. centric we're talking about now, because it has to do with U.S. regulators and what they look for. So if there's anybody who's unclear on any of the acronyms, just please pose a question.
Yeah, thank you. Thank you. So I ultimately thought, or we thought as an executive team, and then with the board, we thought we'd have stress in our target operating model in terms of potential backlogs in our periodic reviews in the client lifecycle. And what was amazing as we got into the pandemic, hardly any of this presented itself. And we found this very curious, because we anticipated stress in the target operating model in this regard, and it didn't present itself. So then naturally, we began to look at the target operating model, and our assumptions didn't prove out. So either our assumptions were wrong, or the target operating model, the machinery we were running, supported by elements of artificial intelligence, needed to be recalibrated. And what we found is that our assumptions from the pandemic were too conservative. And we found that indeed, as we looked through and did more diligence in our FEC models, there was not an undue level of bias. They were calibrated right. And we did an analysis, as we commonly do, on customer activity, what is expected in the customer activity and what actually occurs. And the delta wasn't all too significant. We did see a flight to quality. So we did see, on a more macro level, money movement that suggested there was a flight to quality. So we had more savings. So on our balance sheet, deposits go up. We had less borrowing. So on our asset side, obviously it goes down. That presents a funding issue. And then we saw less borrowings. We didn't see an enormous spike in payments. We didn't anticipate that. And so right now, being the back half of this calendar year and still in the pandemic, we believe through our management information and our assessments, our target operating model for financial economic crime, inclusive of fraud, is more or less stable. So it's back now to the innovation. So safety and soundness, liquidity, risk management, and capital for the bank is relatively stable and in good order and being managed very well by teams of colleagues. Now it's back to innovation. And a lot of the remarks Linus made earlier, they are very similar to our Dutch bank. And maybe that's due to proximity, being just south of Denmark, headquartered in Utrecht. But we too have AI guilds, we have tribes, we have squads. So very much a similar construct from an idea generation and an innovation perspective. Another thing I find curious with respect to innovation with AI and introducing it into financial economic crime, in my experience, I find the most difficult element has been developing the business case and then selling the business case in a way in which all stakeholders commit to it, budget for it, and get behind it and agree it. I find that it is a very methodic process. It is repeatable in terms of it's not a one-time review of the business case and then a commitment for capital to deploy. It has to come back time and time again. So the timeline is not quick. It's very slow and methodic. And again, to the comment which really triggered me earlier on innovation moving at warp speed or very quickly, I find that the business case and the variables that were in the business case change over time very frequently because the innovation curve is so steep. And that has been very difficult. By the time we have gone with our business case for money to the board, to the business, to external stakeholders, whether it be supervisors in the EU or whether it be regulators in the United States or Canada or other countries, the variables in the business case have changed. And so it's almost back to the drawing board. So that has proved a challenge for us.
Can you give an example of one of those cases where the variables have changed? That just helps make it more concrete for me, I know.
Sure. So we had an initiative for a data lake. Now this was internal. So we had a new data lake being set up. So data being the key to all of this. Before you design very robust RPA and workflow and automate with NLP or machine learning, you got to get your data in order. That's a key lesson learned. And we had a new data lake being deployed internally. And the business case didn't account for this technology initiative of a data lake. So by the time the math and the business case was developed, it was based off of a key variable, which was a different data source. And that data we needed, which is crucial, was now migrated to a different source system. And so all the features of the connectivity and how the process was going to run, tagged to dollars in both USD and euros to that process, had to be changed and reevaluated. The math changed, therefore, within a month, it was back almost to the drawing board to redo a business case with new math in terms of seeking budget, and then go back to these various stakeholders. So that was one we could control. And then there are external variables which change. So there is a vendor who I won't name where we RFP'd and we had a good case to take through our committees and our governance to get the requisite budget. And inevitably, again, in this environment of innovation and some of these fintech companies, that organization became a target of an acquisition, became a portfolio company in a large private equity firm, and everything changed, including the board construct and the principals who we were dealing with. So that was unfortunate and one we couldn't control, but it changed again. All that work we had done in the business case got derailed. And so that has been, in my experience over the last few years in particular, a key challenge is the business case has to have an element of flexibility in it. So what we are doing now is doing a kind of case, best case, middle case, worst case, and proving out that flexibility if certain variables, which we anticipate may change, do.
I think that's, when you talk warp speed, you think a lot of times about startups who don't have the legacy infrastructure and the decision making that would be the case at a larger or older institution. So that is an actual interesting takeaway, that you build business cases differently, understanding that you may need to have 3 or 4 different flavors of them rather than having to rebuild the whole case, since the process, the time it takes from building that case to getting it approved, you have less control over that. So you need to adjust your case to reflect that there may be changes in some of the underlying assumptions, underlying inputs.
Yeah.
So now that you're getting back, and we got a couple minutes left, now that you're getting back and the regulatory side is a little calmer, what are the areas of AI where you see the most, to be the most fruitful, or the ones where you deploy the most energy? Not asking you to give away any particular secrets, but I mean, AI is such a big encompassing topic and people use it in many different ways. So if there's a specific, I like going to specifics because they make something that's at a big level, they make it a little more real. It's like when you mentioned a PE firm, a private equity firm buying somebody, that made a lot of sense. Okay, I can see that because that happens. So now that you're a little more free to deploy energy and deploy resources, where are you putting it?
Yeah, great question. We are putting it into our CDD, or our customer due diligence efforts. I'll term it CDD, customer due diligence, and EDD, enhanced due diligence. And it really is targeted to the client file. Specifically in that client file, the information and the data we store for and with our customers. Absent having to make sure privacy, GDPR, and other privacy elements are around it, that data is really valuable. We need to manage it in order to do financial economic crime compliance well. And so really it's further enhancing RPA and NLP for fraud checks. We have, and I heard the comments earlier, we have prohibited customer lists, which are manually intensive. And we just need to automate that. We have credit score checks in the United States, PEP, so politically exposed persons, and sanction screening. So it's really some blocking and tackling basic elements, which we still need to further enhance through automation, and then get a little more sophisticated in terms of an overlay for machine learning. That is really something we're focused on as an organization, because the quality of client files and CDD in general is a monumental task when you have millions of customers in countries all around the world with various different data requirements for those files. So right now, processing per jurisdiction or country looks different. And we're trying to synthesize and automate the client file for the whole life cycle using these techniques in AI, David.
Okay, so there's a question from Dr. Kevin McLafferty
Oh,
as
great.
regarding the context. There you go. Oh, great. It may have popped up on your screen. My question is regarding the context of AI. Is the term being used as automated analytics, or is there true AI being undertaken? And if so, what is that? So there may need to be a back and forth to clarify there, but Dr. Kevin, you're here online, so you can always pop open if you want to talk to Vaughn about it.
Hi there. Yeah, Dr. Kev here. Yeah, I was just curious about the AI because I think it's a good point. It's a valid point, and there are some really groundbreaking AI experiments underway within many institutions. However, I was just thinking, there is AI more to do with automated analytics, as I've put, um, or is it you've got experimentation of really some sexy new stuff that's being done that is going to set a new paradigm for the market?
Yeah, so great question, Doctor. Thank you. The evolutionary programming, the real cool stuff, is being done through our AI guild in Utrecht in the Netherlands, our home office. So that's really the sophisticated group of mathematical, innovative minds doing the work. As the CCO in North America, I am the recipient of a lot of that cool stuff. What I'm specifically addressing in my comments for North America is more the former. I'm really looking, I use AI, I try to describe it as RPA, machine learning, NLP. And it doesn't get right now for North America any more sophisticated than that. And it really is attempting to use some of those historic techniques and deploy them to take out our operational risk, to automate our processes, and then in working with the Netherlands to do more sophisticated evolutionary program, including more advanced machine learning. We just don't have the data profile to really, I mean, we haven't turned on the AI for an extended period of time. So we just don't have that baseline to really help the machines evolve and learn.
Thank you. Sounds like you've got some great stuff coming through that is really going to help your automation side, but also the cool stuff that is going to do the thought leadership stuff, which is, you know, taking all of your different components of RPA, automation, big data, and putting them all together to really do something that helps protect you, the bank, as well as your clients as well. But well done. It sounds amazing, awesome, and it's great that you've got a bit of a think tank there as well. That lab will pay dividends. You know, like the hive mind, you get a lot of clever people in a room, chuck in some data and see what happens.
Yeah. Yeah, I find it fascinating, and you know, we're a bank at the end of the day, and our cost to income ratio is simply too high. So when we look at innovation in this stream for financial economic crime, there is such a business case, in my humble opinion. There is such a business case, and it's a matter of translating that innovative, awesome thinking into practical operations in the banking business to do our financial economic crime in a more effective and efficient manner. So I am sold 100%, and it's naturally just translating that intellectual capital into a business case and proving that out over time.
I mean, just to respond to that, as Dave said, this is quite a cyclical conversation. Is that one of the frustrations that I have personally within the AI space is that it takes a lot of investment. Granted, it's a slow burn in terms of you can be investing in a business case, like you say, and let's face it, we all plan our budgets and our business cases on a 12-month horizon. However, AI and all of that cool stuff has got a horizon that maybe even beyond 5 years, and that is typically beyond even the furthest planning horizon of a financial institution. So when we do run into the same challenges there, I guess, like robotic process automation and all that IT good stuff has got a very short horizon. It's somewhere between 3 months and a year and maybe up to 3 years for a big system overhaul. But that whole AI piece, I think, as you imagine there as well, and we're sharing our experience, it's a hard business case to put together. But I think you hit the nail on the head when you said you need to be prepared to evolve that AI business case as you move through the journey, but never lose the focus of we need AI to be. You need to be in it to win it, basically, for the future. And if we don't make the learning today and spend the money, we're going to lose out in over the 5-year horizon. Is that kind of contextually what you see as well? Yeah, cool.
Yeah.
I think it's time to move on to the next one. I want to thank Vaughn very, very much, and thanks Dr. Kevin for jumping in there, because I can tell we're going to have a robust discussion later on. Feel free, anybody, to jump in and add to this, because that's what makes these things interesting, is the discussions that take place.